रिव्यू तो स्वागत है मेरे पार्ट टू में अब we may we may note here that some commodities like television set automobiles or home computer all through that are for ultimate consumption have have one characteristic in common with the capital good. They are also durable. That is, they are not extinguished by immediately or even short period of consumption. They have a relatively long life as compared to the articles such as food or even clothing. They are undergo wear and tear with gradual use and often need to repair replacement of part. Example like machines, they need to be preserved, maintained, and renewed. This is why we call these goods consumer durable. Thus, it we consider all the final goods and services of produced and an economy in a given period of time. They are either in the form of consumption good, both durable and non-durable, or capital good. As final good, they do not undergo any further transformation in the economic process of the total production take place in the economy. A large number of products don't end up in the final consumption and are not capital good either. Steel sheet used for making automobiles and copper used for making steels. These are intermediate goods mostly used as raw material or the input for the production of the other commodities. These are not final goods. Now we do have to comprehensive idea of the total flow of production in economy. We need to have quantitative measures of aggregate level of the final goods and produced in the economy. However, in order to get a quantitative assessment, a measure of total final goods and services produced in the economy, it is obvious that we need a common measure road. We cannot admit of the cloth produced of 2 tons of rice or number or automobile or machines. Our common measurement rod is money. Since each of the commodity is produced for sale, some total of the monetary value of these diverse commodities give us a measure of final output. But why are we need to measure final goods only? Purely intermediate goods are crucial input to any production process and a significant part of our manpower and capital stock are engaged in production of these goods. However, since we are dealing with value of output, we should realize that the value of the final good already include the value of the intermediate good that have entered into the production as input. Counting them separately will lead to the error of double counting, whereas consider intermediate good may be fuller description of our total economy activity. Counting them will highly exaggerated the final value of our country activity. At this stage, it is important to introduce the concept of stocks and flows. Often we hear a statement like average salary of the someone for 10,000 or the output of the steel industry is so many tons or so many rupees in values, but these incomplete statement because it is not clear whether the income which is being referred to is yearly, monthly, or daily income, and surely that makes a huge difference. Sometimes, when the context is familiar, we assume that the prompt period is known as and therefore do not mention it. But inherent in such all statement is a definite period of time. Otherwise, such statement are meaningless. Thus, income or output or profit are also concept that makes sense only when a time period is specified. These are called fellow because they occur in a period of time. Therefore, we need to delineate a time period of to time in a period of time. Therefore, we need to delineate a time period to get a quantitative measure of these. Since a lot of accounting is done annually in an economy, many of these are expressed annually, like annual profit or production flow are defined over a period of time.